Hey, what's happening? Trader Tim here from EminiMind. It's been a pretty quiet week. Even though we had the Fed meeting announcement on Wednesday, I really didn't have too much for trades, and I almost didn't even do, wasn't even going to do a trade recap video this week, but I wanted to start. I'll run through the trade I had today, but I wanted to show you how I redraw the retracements on the daily chart, because we have the prior 50% retracement that we came down to the negative 23, and then we could draw the next one. Earlier this week, I had that drawn up from kind of the entry down to the negative 23, and we broke through the 61.8. So I was about to delete all these and draw the full halfway back, but I thought, well, I'll do a short video and show you how I draw those. Um, and so I guess before we do that, I just want to mention that in December, we're coming up on our kind of annual masterclass. So I'll put the link for that below in the description if you want to learn kind of more in depth how all of these setups work as far as the intraday retracements for futures, and other people use them on the SPY and other markets too. So these short videos people seem to find really helpful because they are applicable to the week and the what's happening right now in the markets as we go through trades and things like that. But if you want more of an in-depth kind of walkthrough start to finish, that masterclass is a really good tool for that. So the first thing before we get into today's trade, the daily chart is always the place that I start because um, that's where things are going to happen the slowest. If we go down to like a 512 tick chart or a 1 minute, that's where things are changing the quickest. So I always like to start from the top down, at the start of the week and look at where we are in the daily chart. Where are we in relation to the most recent 50%? Are we at the start of the 50%, like right on top of it? Are we at the negative 23? So let me delete this for a second. And coming into the week, let's just back up and pretend like the week is starting. Let's see, we want to go back to the 30th, and that was down here. So it would look like that. And so as you start the week, I say, okay, where are we in relation to the most recent daily halfway back? Are we at the 50? Are we at the negative 23? Or somewhere in between? Well, we were down here at the negative 23, meaning the target has been hit for the negative 23. And we can go one of three places from here. We can bounce up to the next 50% retracement. So you want to draw up the next retracement at that point. We could just go sideways for a little while along the negative 23, or we could continue to sell off to the negative 61.8, which is a little hard to see here, but it's down in here. And so those are kind of the three places that we go from hitting the negative 23% target. So I start by drawing up the next retracement in the series down, and that we did bounce this week very strongly. And so Wednesday we came to the 50% short, and then Thursday blew through it, and then today continuing to go higher. So when we break a 61.8, we can delete these two retracements, and rather than just trying to find a random anchor point, like, oh, we're going to go, let's just try this day's high and see if that makes a clean retracement, or can we get the 50 to line up with where price is currently? I just go to the full halfway back. So when you break a 61.8, when you're going down in a series, you got, here's the first one was like this, the second one, and then now the third one that just broke this week, so we can come draw the full halfway back from, in this case, highs down to lows. And really that's it. You don't want to be picking, I don't really, like I said, try and come in here and pick random retracements. Just go to the full, and that will be the next, kind of the last line in the sand. And so with the 50% now kind of sitting at right about where we're at here in the current day here, Friday. Next week, start of the week, there's a good chance that we kind of go sideways here or maybe get a little bit of a rollover. But this swing high cluster back here is going to be really important area to watch. If we can push through that and close above this 61.8, that will be incredibly bullish, and there's a very good chance then that pushes us up. We have some momentum to maybe not in one push, but make our way up to all-time highs. So I still think there's some bearishness coming, just as far as you know a move back down. It's not going to probably be just a straight up move into all-time highs, especially with these major gaps that we've seen here. The trading gets to be kind of thin and light, and you can see like the volume dropped off a little bit here. See how it's lower compared to these down moves? The volume was quite a bit higher. So probably a bit of a rollover next week. We can even draw up like the next retracement if we start to pull back, and then watch that 50% level to see if there's a bounce. But that's just as far as like drawing, starting in the daily chart and then drilling down to the smaller time frame. A trade of note, I suppose I'll mention on Wednesday, I did buy some puts at the close on Wednesday. We came up to the 50%. Probably could have passed on them. We weren't exactly at the 50, but I bought the puts in as a safety insurance in case we gap down on Thursday. And so when we gapped up on Thursday, I just went to the 15-minute chart, and then and I bought these on the SPY, not the ES, and then just looked at the first 15-minute bar, and then once we broke above that first 15-minute bar, I just closed them out. And I would rather do that, close them out early for a small loss, and then buy them back on a day like today at the close, than just sit in that original position and let it, go to expiration and hope that it comes back around. So you think clearer when you're not in a position, and when it comes to a trade immediately going against me, or to say it another way, if the trade doesn't start going my way fairly quickly, I'm okay with switching gears and closing out of the position. And I'm just going to change my batteries here in my mouse because they just died on me. One little tidbit is always have a spare pair of batteries on your desk for when if I can get this battery out, for when they die. That way, if you're in the middle of a trade, you can get out nice and quickly. And okay, back in business. So yeah, at the close today, I'll plan on buying some new puts at a higher strike. So if we just flip to the SPY real quick, they're at the money. So like on Wednesday, buying at the money here, or even just a strikeout or two is good enough. And then when you get a gap up like that, move kind of your mental stop. I just move it above the first 15-minute bar, close them out, and then I can rebuy them up here at a much higher strike. So if we just come down a little bit, now these new puts will be moving much more in my favor versus, that old strike would have been down here. So, and then you just save, the potential additional loss from that 15-minute bars high to wherever we end up today. Let's go to intraday chart here, and the 15-minute did break to the upside today. It's actually a pretty decent week for 15 minutes. Well, I guess yesterday had a 20-pointer, and then today we're inching our way closer. Just need a couple more points to get that 20-point target hit. I got my stop at -4 because we've got 15 points in the black so far. So when we get up to a +15, I move my stop to -4. And I don't trade on Wednesday, and Tuesday we filled the gap, so there wasn't anything there. But let's go to the retracement from today, and we'll zoom down. 7:04, so 34 minutes into the day. We with the gap up, we had these extreme nicey tick readings, and you typically see kind of a 45-degree trend line down towards the zero line, which is this horizontal white line. That's exactly what we got today. And so I did not want to short in the first half hour. Because we had gapped up again, and the breadth and advanced decline line were strong. We had some news coming out at the top of the hour, so I just kind of sat tight for the first half hour. And then we got this giant inverted hammer candle right at the top of the hour, and that looked like this upside down V on the 512 tick chart. And when we retraced, when we bounced back up, we were pretty close to the top of the 30-minute range, but we were also still pretty close to the top of the hour. The news had just come out. It was ISM Manufacturing Index, and so we were still a little bit reactive and wild. So I didn't put an order right here at the 30-minute high. I waited till the next retracement. So we came down to that negative 23, and then I drew up this retracement short here. 43.75.88, round down, subtract a tick, 43.75.50, and that's what the short entry was. Now, at the same time, I had this halfway back long drawn up. So I drew the long up before this short even triggered, because I want to make sure we don't touch the long before we touch the short. So if we're coming down, this halfway back long gets drawn up as soon as we can, make this high and get a little bit of a pullback, and that can be a potential support level. So we were still a couple points off of that level. We had room between the 50 of the entry short and the 50 of the halfway back long. That was almost 6 points. So that's enough room to get a 3-point first target and then be able to, get a little bit more. And so what I did here, once, the trade triggered nice and cleanly, and then so this is why you always round down, and then I also subtract a tick, because if you get a very clean trade like this where it just comes up to the 50 and reverses, and your order is 1 tick higher, or if it's on the 50% exactly, you need price to trade through your order to get filled. 90% of the time. Every once in a while you get what we call a magic fill, where price just touches your order and that's as high as it goes. But yeah, with first in, first out, you need price to trade through your order to make sure that all the orders were filled at that price level. So a nice clean touch there. We sold off, dropped my stop to break even, and then just trailed the next 50% retracement from this swing high down, and just trailed my stop down. And then once we got past this low, this swing low right here, then I shifted gears and got real aggressive with my stop, and I'll zoom in here, and just trailed each candle as best I could. They're moving kind of fast, so sometimes I'm 2 candles behind, but I'm just trailing my stop above the prior candle, because this large 50% retracement long is very likely going to be a support level or some kind of bounce level. So if I have my stop way up higher, now I have to kind of let the trade bounce, and I'm at risk of it bouncing because this is a larger support level. So I prefer to come in and get more aggressive with it, and I think it was a 71.50 that I ended up getting taken out at right here. It did bounce, rolled over a little bit more. In this particular trade, had I left my stop right above the 61.8, I probably would have been taken out. If I gave it a little bit more wiggle room, I probably could have stayed in for the next little push down. But in a lot of cases, when you're coming to a support or resistance level that's a bigger price level, like you can see it on a 5-minute chart here, and our 15-minute is getting super close. The larger support and resistance level has a better chance of getting a larger bounce. So that's how I traded that one, and that was really it. Other than this 15-minute that is getting pretty close to its target. So quiet week, but that's okay. Now that we're through the Fed meeting, we've got another big chunk here for the next 6 weeks to take us into the end of the year. So hope you have a great weekend. You can sign up, like I said, for that master class. Oh, that will be December the 4th is the actual class. So if you sign up now, you'll get some other materials to kind of start working on between now and then the live class will be on December 4th. So hope you have a great weekend. We'll talk to you soon.